Hope everyone's doing well and had a good day. This is going to be a very brief review of the Emini 5-minute chart from Monday, June 23rd, 2025. The first thing I want to talk about is what we had going into the day. Because there's only a small gap, I typically will look at the blowback session to see what we had going into the day, but when there's a small gap, you can assume there's a trading range, and you can also use the bars from the prior trading day, Friday, on the regular trading hours time frame. So here we can use what we had yesterday going into the day. And what we'll notice, or one thing I noticed, the bears had a spike in channel, and you can back up even further and see the spike pullback. You could say the pullback started here, but generally speaking, spike, deep pullback, and a channel. And there's the bear trend line. So going into the day, the bulls might argue it's a triangle because we had a higher low at the end of the prior day, Friday. If I say yesterday, I'm talking about the prior trading day. So on a Monday, I'd be talking about a Friday. Higher lows, lower highs. Now the market's trying to break out above the bear trend line to get the upside breakout and maybe test the start of the channel, which may be up here. And the bears would like for this to be a contracting triangle bear flag and then get trend resumption, a downside breakout. Bar 1 a bear trend bar, but bar 2 immediately reversing up. Bar 1 was strong enough for a second leg down, but bar 2 was a surprise, big down, big up, and now bar 2 is a second leg. So the traders who sold for a second leg for bar 1 got trapped on bar 2, and now we'll probably get a second leg up first before we get a reversal down. Small follow-through bar on 3. Bar 3 is volatility contraction. I'm going to talk about this more a little later, but basically what we had here, 2, 3, 4, is big, small, big. So breakout, pause, or trading range, and then another breakout. Traders who sold above bar 1, which was a reasonable thing to do because it's a bad stop order buy signal bar, they got trapped on 2, and bar 3 never came back to this level, and then we got another breakout on 4. Strong enough rally, 3 or 4 bar bull micro channel, second leg up, likely. And because of the structure going into the day, we have a completed bear pattern. We have a spike in channel, and the channel is expected to evolve into a trading range and test the start of the channel, which could be all the way back at the bar 11 high from Friday. So structurally, this makes sense for a correction and a test of higher prices. And at this point, what do the bears have to sell? I'm trying to keep it really simple for myself, especially for trading. Trading systems have to be simple. And one thing that I've been thinking about is just simply asking on the close of every bar, and this is something that Al talks about, Ali talks about it, they talk about it in different ways. Al, he says, the most important decision a trader has to make on every bar is, are there more buyers or sellers above or below the prior bar? Ali will talk about the 3 possibilities. So think about on the close of every bar, you have a decision to make, and it's either a buy, a sell, or a wait, or a do nothing. And a do nothing can mean wait and stay flat if you're flat, or if you're in a trade, maybe you're in a swing trade or even a scalp, but you're in the trade for a couple of bars. Do nothing might be just hold on to the position, long or short. And so here, the way that I think about trading price action, everything revolves around breakouts and second legs because, well, breakouts get a second leg up to 95% of the time. There's nothing in life that is that high in probability, and you'll see it all over the place in charts when you're looking for it. And price action is a fractal phenomenon. I mean, you see it everywhere on the higher time frames, the lower time frames, implied. It's really everywhere. So that's the way I'm going to base, that's the foundation I'm going to base my trading on, is breakouts and second legs. And if that's the case, and there are other things that go into it from market studies, like basically everything comes down to our beliefs. And that is, well, for one thing, our trading beliefs should be based on first principles, but also beliefs are also going to be shaped from market studies. So it's also our responsibility. It's one thing, and this is directly from Ali, it's one thing to read the books and find what someone else has found. Read Al's books and you read about the stats he talks about. But it's a completely different dimension when you actually do the study yourself. And you can study anything you want, but you have to kind of confine and restrict what you're doing down to objective, or really subjective, you decide, but you need definitions. And that puts constraints on your study. But anyway, the point is that the way we trade is based on our beliefs. Systems are just a reflection of our beliefs. So one thing, all of that to say here on bar 4, if I'm trading breakouts and second legs, what is the argument for a bear to sell? And for me, I don't have that argument. Where's the bear breakout that I'm trading for a second leg? It doesn't exist. And not only that, it's not exactly true. Bar 1 might get a second leg, as it did today, and it's delayed. But the point is more that I'm looking for breakouts like this, bear breakout here, pullback, second leg down, bear breakout, deep pullback, second leg down. But now the bulls look like they're in control. It's always in long, 3 consecutive bull bars. And we also had the wedge. So 3 pushes down, you can call it a truncated wedge, head and shoulders bottom. Doesn't matter what you call it. The energy is what's important, the energy of the market behavior, the pattern. And I said, channels evolve into trading ranges, so we expect a test of the start of the channel more than a downside breakout of the channel line. And we're getting that correction here. So what's the argument to go short? If you're trading breakouts and second legs, for me, there is not one. So the only option for decisions here on bar 4 are to buy or be flat, to be long or to be flat. But being short is not an option. And that's the same for all of these bars. Where's the bear breakout that needs a second leg? It doesn't exist. We reach the target for the bulls. We find a little bit of a reaction. We break out above, close above, pull back. But still, where is the bear breakout that needs a second leg? 12 might need a second leg. Now we have 2 reversals, probably sellers above 12. Weak high 2, getting sideways bars far above the moving average, probably going to pull back and get mean reversion to the moving average. This is something that I really caught on to when Brett talked about it, so I hope I portrayed it well as well. And that is, if you think about the price movement, the price action, its behavior relative to the moving average, this is far above bullishness. This is strong bull price action. And bulls are going to be willing to pay far above average price. The 20 EMA is what I'm using. That's one measure of average. Traders will be willing to pay far above average when there's momentum like this. As soon as we start to get a high 1 that fails, and then we have a high 2 that fails, now we have all of a sudden 5 or 6 bars sideways, and we're going sideways in a tight trading range, but we're getting now average price action far above average price. And that can cause a snapback to the moving average. Kind of had the same thing on the daily chart down here. I talked about that maybe last week or 2 weeks ago, where we had 3 or 4 legs up and we're far above the moving average, and the traders buying momentum, if they get momentum, are going to look to sell. Bears are selling, bulls are selling, and then we snap back to the moving average. Same dynamic here. Now what's happening here? Bear breakout, pause, bear breakout, pull back, bear breakout, pause, bear breakout 18. To me, looks like 4 pushes down. Volatility expansion, trend bar, volatility contraction, almost an inside bar, expansion, contraction, inside bar, expansion, outside trend bar, trading range bar, and a trend bar. Volatility expansion is simply a breakout. The range is getting bigger. Volatility contraction, simply a trading range. The range is getting smaller, like here, lower highs, higher lows, contracting triangle. It's the same thing here, expansion, contraction, and so on. So now we have 4 pushes down. We're also testing support, breakout 7, follow through 8. A trader may have sold above 6. 4, 5, 6 on a smaller time frame is a wedge, but it's really a minor wedge. It's a wedge on a smaller time frame, but we can see the momentum getting smaller, bigger, bull body, smaller and smaller. If we looked at a 1-minute chart, we'd probably see the wedge, and we got a breakout of the wedge and a measured move up. And we're coming back to test that breakout point with a 4th push down, so probably support here. But this broke the bull trend line, very tight bull trend line. So bull trend line break, expect a retest of the highs, but this breakout down to 18 by the bears probably needs a second leg down. And what the bears are hoping for is a lower high major trend reversal. The bulls are hoping this is simply a minor reversal, and we ultimately get a measured move up. Trend resumption for the bulls, strong bar 19, but 3-bar micro channel probably needs another leg down for the bears. Also 11 down to 18 probably needs a second leg down, but 19 through 21 also probably needs a second leg. 4 bars up, probably buyers below. Bear breakout 23. May need a small second leg, and then a surprise 24. Traders buying for the second leg of 19 through 21 or 22, trapped on the bear breakout. And the bears hoping this is again a lower high major trend reversal. Tight bull channel. It's really a breakout. Here's the bull trend line, something like that. Clearly broke the trend line on 18, and then a lower high. Bears hoping for minimum measured move down. So it's a double top, breakout below the neckline, 24, measured move down. Bears would love an opposite trend, but after a rally like this on the open, the odds of a bear trend day decrease significantly. It doesn't take much to do a study on day type or day structure to find that you're not going to find many bear trend days that have a rally like this one from bar 2 to bar 11 on the open. Even if we fall to a new low, probably buyers below and some type of trading range day, maybe an expanding triangle. Bar 1 is kind of a hint. Bar 1 remains the low of the day 20% of the time. And now we're getting a topping pattern, lower high major trend reversal, strong breakout and follow through, 23, 24. The risk is real that we fall down here at this point. Not that it's high probability, but there is a topping pattern. And we just recently tested this magnet, the target for the bulls, bar 11 Friday. So the wedge corrected, tight bull channel, trend line break, retest, lower high major trend reversal under effect. 24, second leg down likely. Micro channel down to 27, 28. First reversal will probably be minor. 28, more likely sellers above than buyers. If you're buying 28, you're taking a low probability trade. This is one of those trades that Al talks about. Beginners want the trade with small risk, but small risk usually comes with low probability. You buy above 28, you see a wedge, 9, 18, 27. You see a wedge, bull flag, bull breakout, 1, 2, 3. But this is too tight, and there's too much selling pressure. And this is a micro channel down to 28. So at least a second leg down likely. Bulls need a double bottom. So as far as buying above 28, you're taking a low probability trade, small risk, and you're really trying to make at least 2, if not more, times your initial risk, and the trade fails quickly. And I'm going to speed it up here. Spike and tight channel. Tight channel, it's a parabolic wedge, 25 to 31. Parabolic wedges are minor, so again, it's a wedge on a smaller time frame, but in reality, this is a tight channel. Where's the buying pressure? The bulls are hardly getting any bull closes. Weak bar 25, hardly a bull bar 28, inside bar, and then 31 reversal bar after 3 pushes, but very tight. So again, probably sellers above. Another trade where, maybe you see a nested wedge, 1, 2, 3, 1, 2, 3. You look to buy above, but it's a low probability trade, and we didn't even get above it. And there's a risk of the downside breakout of the wedge. Parabolic wedge, you expect a minor reversal and then trend resumption. It looks like we're getting the test of the bar 1 high on 35, so a sell vacuum of support, but still no buying pressure. Really hard to make an argument to buy. It's the same thing I said over here, but opposite. Where's the bull breakout to buy? If you're a breakout trader, you're trading breakouts and second legs, where is the bull breakout? And sure, there's this, which should get a second leg, and it hasn't yet, but you need something here. You need a trend line break first, just like on the way up. Nothing to sell, then you get the bear breakout, trend line break, you sell the pullback, you get a second leg down. Nothing to buy, so we have to go lower to find buyers. Traders aren't willing to buy. Bears aren't willing to take profits yet, or they're taking profits. They're becoming more efficient. Bears are selling pullbacks, taking profits at new lows, selling pullbacks, profits at new lows, selling pullbacks, but the bulls, 3 pushes, but not enough to buy. Where's the buy setup? Where's the stop order buy? And it doesn't exist, and we have to vacuum down to support some other lower price where bulls are going to be willing to buy and bears are willing to buy back shorts. Now this might be exhaustion. Maybe it's 1, 2, 3 pushes down, getting lower in the range. If you say the trend started from bar 11 or 20 or so, maybe 25 bars into the bear swing on a probable trading range day, big up, big down, near the lows, best looking bear bars in the entire sell-off. So it's hinting that it may be exhaustion and better to take profits here than look to sell. But that doesn't mean you buy to go long, or at least I don't. And then 37, the biggest bear bar in the entire sell-off, great profit-taking bar. Most days test the prior day's high or low. We're so close to yesterday's low. With momentum, we'll probably get there. But again, this might just be exhaustion and a sell vacuum of support. 38, a bar that bears may just exit above. We're at support, big up, big down, and a sell vacuum testing support. Probably get a small second leg at least and a double bottom for the bulls, but 38 is a bar that traders may just look to exit shorts above and buy back shorts above, not willing to risk a mean reversion snap back up to the moving average like 39 did. But 39 may get a deep pullback and test the stop order. This bear breakout will probably get some sort of second leg, like I said. The pullback may be deep, but ultimately the bulls will probably get a second leg. Now they have a bull reversal and follow through, strong reversal and follow through with good structure. Looks like a trading range day. We're testing support, yesterday's low, broke out below but did not close low, so failed breakout below yesterday's low, and then big follow through up. So probably buyers below on 39 in the buy zone. There's our deep pullback, attempt at a second leg, but testing resistance. The bears see a low 2, bear breakout, low 1, double top, maybe a low 2. Not ideal to buy here. Better to buy maybe below 43 if you get the chance. In this case, we got the upside breakout. We're at a measure move. We're testing near the high of the day, but what's the reason to sell? If you're a breakout trader, no reason to sell, okay to buy and be long or be flat, but do not sell. Breakout above yesterday's high, it's an outside day. It's an expanding triangle day. Down, up, down to a new low, up to a new high. Probably sellers up here. Again, probably not a trend day, not even a bull trend day, despite the strong buying here and here because of this deep pullback to a new low. So probably sellers above at the new high. Here was the prior high. Breakout and follow through above, good for the bulls, but we're only just testing the high of the prior day. And we're starting to go sideways. So same deal as over here and down here. Find a buy momentum far above the moving average, but as soon as you start to go sideways, the risk is real that we get a deeper pullback. So tight trading range far above the moving average, probably need to go sideways or down to find buyers. Continuing sideways here. Tight trading range, you can still see the fractal price action patterns from the high of 50 down to 51 is a bear reversal. Deep pullback, testing that high, but still a lower high, and then a second leg down, 52 to 53. And the bulls have a double bottom, high 1, high 2, reversal and follow through. Bulls get a breakout, a pause, implied pullback, second leg up. Second leg subdivided into 2 pushes, 1, 2. So 3 pushes up, lower high, probably sellers here. This may need a second leg down as it's getting here. Very tight trading range through here. Better to just watch and be fascinated by the fractal nature of price action for me than to trade it. There's the test of the moving average. Probably going to be buyers after this momentum and this sideways pullback. Not much bear momentum here. Again, if you're a price action trader trading breakouts, where's the bear breakout to trade? The bears have a completed structure. 1, 2, 3 legs down. Testing support. And the bulls need a second leg after this. And a test of the highs, which they got quickly. Now the bulls have a completed structure. So sellers at a new high and the market's in a trading range. Overall, interesting day. Some more buying at the end of the day there. So trading range, but bull breakout preceding this trading range, all the bars above the moving average. The breakout direction favors the upside, only at least slightly, but even if it's 55 to 45%. But that's going to be it for today's review. So thanks everybody for watching and listening. And I hope everyone has a great night, and I'll talk to everybody soon. Here's my marked up chart from today. Just kind of some of the highlights that I saw, things that stood out to me. And I'll leave this on the screen so that everyone can take a look at it and maybe see what you agree with or disagree with, or compare your own to mine, or use it however may be helpful to you. I saw today as an expanding triangle, trending trading range days with tradable swings in both directions. The swing is like a minor trend, so bull swing on the open, lower high major trend reversal into a bear swing, sell climax at a new low, then a higher low major trend reversal back up. But overall, lots of two-sided trading. So that's going to be it. Thanks everybody for watching, and I hope everyone has a great night.